Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily chat room filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out. We look forward to seeing you in the room.
Hey guys, good morning everybody, and welcome to, first of all, happy Sunday. Hope everybody is having a great weekend. It is nasty and raining, and a perfect day to kind of get into some things, talk about a little bit psychology, talk about one of the greatest things about psychology and that really handicaps people in their lives, which is fear. We'll get to that in a minute, but everybody, thank you very much for coming out. I know some of you guys are having a problem getting into the live webinar today. For some reason, it took me a little bit of time to log in, so if you are having problems, I apologize. Believe me, you didn't miss anything. We just literally started, and this will be recorded and sent out with the weekend video, so hopefully everybody's having okay. For everybody else who is here, guys, welcome. Thank you very much for spending your Sunday morning with us, and another installment of episode 4, right? Episode 4 of the series Pancakes and Pivots. Again, still no pancakes, some pivots, and some hopefully good value that you can just really embrace and put it into your into your mental library, and hopefully can benefit this for years and years and years. So good morning. Let's get kind of a quick review of last week. Look, we're definitely in probably, right? We're definitely probably one of the more aggressive markets. I think there's no denying that. We're definitely in one of the most aggressive markets that I could remember in many years. Okay, it's been incredibly linear. It's been incredibly aggressive. For those traders who do have a process, and obviously everything in life, just not even just trading, just everything in life, you need a process. And I think those who are patient, that have a process, are going to benefit in any market. And the one, one argument, and actually the one, really good, good discussion is, how does this market compare to .com? Again, this market does not compare to .com. For every one move, an incredible move that you saw in an Amazon or in an Alibaba, or whatever the case may be, any of these high beta names that are putting in this just an unbelievable moves. For every one stock that does that, again, for anybody who's ever traded during the .com era, it felt like 10, 20 of them were doing the same thing every single day, and that lasted for about 15 to 18 months. So look, the market is really aggressive right now, incredibly aggressive, very tradable. But the one comparison you could make is during the .com era, or the golden age, that interval of trading. A lot of people, and again, it was a lot of the stories throughout time have always been exaggerated. The streets were paved with gold, and look, a lot of people did very well. There's no denying that. But during that time, there was also, in my opinion, when we were at generic trading, especially towards the meat and potatoes of the .com era, we kept on seeing still a very healthy rotating door, and everybody just believes that anything that you would have bought went straight up is a little bit stretched out from the truth. And the reality was, during that time, 80% of the people were not making money. It's just a reality. I was scared to death. Again, it's kind of a theme for this episode. But it was very exaggerated that everybody just walked into rooms, turned on their computer, and turned 25 grand into 25 million. It just didn't happen. A lot of people did very well. But again, the difference between now and the difference between then is the volume of opportunity then versus the volume of opportunity now. So for example, Friday, Amazon, went on this just an incredibly linear run, and you can see this. And you can see this just from the 60-minute. It gapped up, And then it just took, I mean, there was literally there was no downtick, right, Kev? I couldn't find an entry for Amazon. I didn't trade Amazon the whole day. I did not put on a single trade at Amazon the whole day. And I trade Amazon every day. I trade Amazon literally every day, sometimes on both sides of the candle. I couldn't find an edge to Amazon. I just kept on going straight. So during that time, you had a lot of these things, the e-toys, the SDLIs, all these different sectors. A lot of them were linear, and what we saw on Friday was not normal. And the most ironic part about Friday's session was you could really see where the pivots, the actual pivots, showed the value. So it wasn't the value on Amazon. Right, guys? It wasn't the value on Amazon that we had during the day. It was the value of every other thing. For example, the pivots on Google, the several pivots on Tesla, the Alibabas, the Apples. They were the value. This was linear. So my question is, right, if something is going up linear, is it better than, well, having a process and making the meat and potatoes off that interval? Again, that's a question that most traders can't answer because most traders don't know what they're looking for. And the whole theory of being patient is kind of like a Hail Mary because, again, what are you patient for? What are you waiting for? If you don't know what you're looking for, if you don't have the ability to identify risk and evaluate it and making it your advantage and having your edge, what is the whole point? And this week I wanted to talk about fear. I wanted to talk about psychology. I wanted to talk about the difference between a person succeeding. And again, overcoming fear doesn't give you an automatic, green light to succeed, but it helps. It really helps. So let's start. Okay, let's quickly get over. Quickly go over Friday's session, and then we will start the discussion. Friday, first of all, the week itself was very good. Very good. I did well 4 out of the 5 days, and one of the days was on Thursday. I was so tired. If you guys remember, Wednesday's session was one of the most aggressive, right guys, right Kev? One of the most aggressive sessions I can remember in beta. I'm talking about one of the most aggressive sessions I can remember in a long time. Tesla, Google, it was especially Tesla, incredibly aggressive session. And I don't think I talked more and described more and went over more things on Wednesday's session, and it was a really good day. It burnt me out to such a degree, okay? It put me on tilt to such a degree. So by the time Thursday kind of came around, I was so tired and burnt out, literally from Wednesday's session. I was so aggressive that I was so burnt out and so tired, I couldn't properly function. And from the word go, from Thursday's session, I was exhausted. My reflection time was just zero. Okay, and I was actually expired. I wrote this little mini blog post of what not to do as a trader. Don't trade when you're sick. Don't trade when you had a fight with your spouse. Don't trade when you have to trade. Don't trade when you have money problems. Don't trade when you're undercapitalized. All these don'ts, and that's kind of how it played out on Thursday's session. So by the time Thursday's session rolled up, I was so just really all my energy was gone. The two trades. I think 2 trades. I was only able to put on 2 trades. I was so mentally out of it that I turned 2 trades from profit, and not even to break even. I turned them from profit to loss, and that really inspired me to kind of have that little mini blog post of what not to do. By the time Friday went around, again, Friday I'm exhausted, but I had a very specific plan, especially with Tesla. And yeah, I hit Tesla. I hit Tesla very aggressively. I hit Tesla very aggressively on Wednesday as well. Ultimately, it was a very really good week, even with my mental kind of fart, I guess you can call it, mental fart on Thursday. It was a really aggressive week. Let's go over Friday's session. Look, I'm not going to go over Amazon, the numbers. Yeah, everyone linear. There's 3,000 websites and 3,000 blogs. You can do a review of exactly what happened in the week. We talk about the trading aspects of it, and we talk about our ability to navigate the market. Not the shining lights, not the screaming noises, not, this is going higher, this is going lower. We are here to dissect and put on our side every specific edge we can find. And Friday's session was actually good, but not for the same reason that a lot of people believe it's good. I didn't trade any Amazon, okay? I didn't buy anything. And chase anything on opening range highs. I waited for my spots. We waited for our spots. Our pivots were very solid, but not in the way that people think, well, the market's exploding. Yeah, the market was exploding, the NASDAQ market. The market was exploding, and the stocks were doing incredibly aggressive, but there was a lot of value actually on the downside. So let's talk about the market. Let's talk about the pivots from Friday. So let's start off with Tesla. Yeah, I mean, again, if anybody still to this point doesn't believe that Tesla is like the greatest thing since sliced bread, again, all you need to do is trade with us for a week, and you'll see why Tesla is the greatest thing since sliced bread. So Wednesday, I caught nearly $4 worth of runners on Tesla. On three trades, very, very aggressive. Dollar and change, dollar and change, dollar and change. Even when I screwed up the last trade, and that's the last one, I didn't want to screw up that. I didn't want to chase that candle. That's the one that went up down at another $6, which a lot of you guys did catch, especially on the option side. I didn't, but it really set me up for Friday's session. So we knew this whole area here. We knew this whole area here. This 326 area right here. This whole 323 area was going to be very, very important. It stopped there several times. In the last couple of days, and once that news came out, and again, please excuse me, it's Sunday, I don't even remember what it was. I think it was some sort of recall or this, that, the other thing. I don't care. It's all about price action for me. I knew, that it had a really, really solid chance to get that 316, 317 level. That's actually the area that we put on the daily pivot watch from Thursday going to Friday. So I knew the measured move was going to get down to that 317 area. So when I woke up in the morning and I saw Tesla sitting there 322, 321, I knew there was a shot. I knew there was a very, very aggressive shot, despite the NASDAQ futures exploding on Amazon and Intel, on Google. So I knew there was a very, very good shot that it was going to happen, and that's what I did. Once I saw the sellers come in pre-market below that 322 area. And again, guys, everything, for you guys who are watching this at home, it's all about transparency. Everybody in the room sees my executions, all that good stuff. So it's not like, we're talking about it after. You can't fake this stuff, guys. You're either doing or you're not doing it. And the most important part is you're doing it with such reserve that you have to make sure that your money is safe before going into the trade. And again, the whole point of trading is, again, lead with your shield, not with your chin. So I knew that 323 was going to be very, very aggressive. Once it started building, I saw that sellers come in pre-market. I started short. I got short the stock 322. Then once they started trickling down little by little, I started covering some down 321, 320, and my last cover was down to 318. I know a lot of you guys started shorting in pre-market as well. I know Ralph caught it from 321 and a half all the way down to 317. Right, Kev? I think you got some as well. Got that some as well. So it was a really, really good trade. Really, really good trade. Not a lot of hiccups, right? Not a lot of hiccups. It went straight down, and it tested that 317, 316 area. So I was very, very pleased. Some other trades, and again, guys, I don't post every pivot. Okay, I don't post every pivot on social media, but the ones that I post, again, guys, they're in real time, and I say this all the time. You can't. This isn't trick photography. You're not trying to trick anybody. When you're trading risk on names, they're going to do what they have to do. Okay, there is no trick photography. You're not putting lines on charts and arrows and fancy words and all this. You're either getting it done or you're not getting it done. That's the name of the game. And a lot of times when I'm not doing 1,000 different things, I'll post the pivot on social media real time. So let's talk about some pivots that we did talk about. Here is the first one, and this is the one I posted on social media. So again, here's the PS60 theory. Okay, here's the PS60 theory. The top of this candle was 321. I believe 321.30, right? Right, Kev? 321.30, 321.40. Again, there's only 6 candles in the day, so once they start getting confirmed and once they start building over that candle, it should go to the next level, right? It should go to the next level. Speak the devil. Hey, Vic. Well, good morning, sir. Vic woke up early for Monday. Good morning, man. I just saw him walk in. For example, Vic, perfect timing. Vic was one of the ones who took this pivot on this 321.50, 321.30, 320.50 break. And again, the measured move was going to get to this 324 area. And again, you have to do this. You have to see this in real time play out. So when you see Tesla, right? So when you see Tesla get over that number, and it did exactly what it had to do, right? Here's the pivot, right? Here's the pivot that we talked about, this 321, 321.30, 321.40. And again, if you believe in this, the theory that stocks go from supply to supply, you know, perfect move. I mean, really, really a perfect move. And congratulations again to all you guys who caught that. And then again, real time, folks. We talk about real time trading, real time pivots. That's what it's all about. So here's here's another talk about value, right? We're not talking about trades. We're talking about value. So here is a pivot, the first area of support on Google, right? Google was up $42 yesterday compared to Amazon that went straight up, very, very linear, very, very aggressive. Google was actually tradable. This was one of the stocks that actually gave you a value play to the downside. And here is your first candle into support. And you know you needed one more candle to confirm for a possible first initial move to 42. And once it confirmed that 42, you actually had a legitimate shot, legitimate measured move to all the way down to that 1030, 1032 area. Because again, if you believe in the theory that stocks trade from supply to the supply, then you have to believe in the theory that stocks trade from demand to demand and then awfully to demand. So if you look at Google's chart, right guys, if you look at Google's chart, that's exactly what happened. So here was your 47, and once it broke that 47, it went all the way down to this 42 level. Actually, yeah, it went down to 41. And once that 41 confirmed, it went all the way back down to this 1033 level. So again, the power of the pivot is not a theory, okay? It's not a speculation. It's real time. That's the whole point. It's real time. It plays out very, very organically. And the most important part is nobody trades it but us because, again, there's an unknown. And this is kind of how we want to segue. I don't want to go through all the pivots, take up a lot of time, but this is kind of how I want to segue into the meat and potatoes of our discussion. And it's fear. Right, guys? We all have fear. It doesn't make a difference who you are, how big of an individual you are, what your background is. We're human beings, okay? Human beings are made up of, very, very basic emotions. We cry, right? Sadness. We laugh. Happiness, okay? We do everything in our power to live our lives like normal human beings. So we get depressed, we get happy, we get we start overthinking things. We're human beings. That's what we do. And this really, really translates into trading. I mean, really, really translates. Think about the most important question, right? Think about the most important questions. And this is, in my opinion, and I've been saying this for years, again, we're not an alert service. Okay, I couldn't care less if you're taking these trades with me, not taking the trades with me. It doesn't make a difference. Okay, I don't trade these $2 stocks and hope to make 6 cents on. Okay, I don't care. Okay, my main goal here, I'm nobody's teacher. My main goal here is to show you what not to do. That's it. It's not to show you what to do. That's the most important thing. My goal here is to show you what not to do, because what not to do is the difference of having fear or having fear with reserve aggression. And that, we'll talk about this in a second. So there's two types of fear, okay? Two types of fear a trader goes into. There's fear of the unknown, and then you have fear of the known. Again, I'm going to repeat this so you guys can write this down. There's two fears, okay? There's two types of fears. The fear of the unknown, okay, and the fear of the known. I'm going to say this right now. I've been doing this for 18 years, okay? It's going to be 18 years in March, okay? I have a healthy fear every single day, okay? Every single day I have a fear. But at the same time, I trade without doubt, okay? I'm going to repeat this. I have a fear every single day, a healthy fear of the market every single day, but I trade without doubt. And let me break that down, okay? When you're a new trader, right? When you're a new trader, the first thing you ask, right guys? The first thing you ask, especially because of social media came into play, the first thing you ask after you put on a trade is, right? What's your first question? Where's my stop? Right? Think about this. The first thing you always ask as soon as you put on your trade is, where is my stop? It's fear, right? It's fear. It's fear of losing money. It's uncertainty. You have no track record with the stock. You have no track record to being a professional trader. It's on the unknown. Why is the stock going to go higher if I'm long? It looks good. The chart is telling me it's good. But why am I so scared? Why am I so hesitant to put on this trade? Why am I so hesitant not to put on normal size that I'm actually going to make money in this trade? Why? Why am I, the guy in front of me is putting on the trade. The quote-unquote guy who's putting in the alert, he's putting on the trade. Why am I so apprehensive? Why is this so scary? Why am I not able to go into this trade with a lot of conviction and I know I'm going to make money? Right? These are the questions I kept on asking myself from the time that I started till I finally, I'm talking about years later, figured out exactly what the hell I was doing. Okay, so when I first started out, again, in generic trading, okay, at generic trading, Carlin Equities, you guys can, especially for you guys on social media, you guys can Google this and see exactly who I traded with and became incredibly good friends with and, had phenomenal mentors. I was scared to death. I was scared to death, okay, because again, I couldn't understand how a stock that I'm going to be buying, okay, and again, predominantly I was long back then, I couldn't figure out the stock that was going, why it was going higher, okay, or why it was about to go against me. I couldn't figure that part out. I was terrified. I was terrified. I watched, at that point, the person who was supposed to be mentoring me, this woman who was an oil trader, blow out just like that, okay, blow out just like that. So I was terrified. When the dot-com era took off the first 3-4 months, I was terrified. I didn't buy a single share. I missed literally the first 3-4 months of the internet craze because I was terrified. And it all stems back to the theory of process. Think about this, guys. It all stems back from process. When you're a brand new trader and the first thing that social media is telling you is you got to short a stock that's up 900%, and then at the same time you're hearing you got to buy a stock up 900%. Well, why is that a theory? Well, why is that a process? Well, you should be scared. You should be terrified, right? You should be terrified. I'd be terrified too. I wouldn't trade those stocks with your money, okay? Because it's the fear of the unknown. It's the fear of not having the ability, okay, to manage your trade, to control your trade, to be in complete control. So yes, I wouldn't be shorting a stock up 900%. I wouldn't be buying a stock up 900%. There's no edge. There's the unknown. So I would be very, very terrified. But the problem was, or the problem is, for a lot of new traders is the reason why you're so scared because you don't have any clear evidence that what you're doing is right. Think about this. If you really step back and think about this, what holds you back from a trade, right? Think about this. What gives you hesitation that you will not click a mouse, that you will not click that button despite the evidence that the trade is going to work, right? It's the fear of the unknown. And when you're a new trader and you're still trying to figure out who the hell you are, right? Who am I? What type of trader am I? Am I an options trader? I don't know. Am I an index trader? And again, by the way, you start getting into that Scooby-Doo voice, right, guys? When we talk about that Scooby-Doo voice in the room a lot of times, because that's what we turn into. We turn into Scooby-Doo. For all you guys who are at home who have no idea what Scooby-Doo is, first of all, you shouldn't be watching this because I'm offended. But for those of you who know who Scooby-Doo is, what does Scooby-Doo know, right? Scooby, why did you do that? I don't know. Where's Shaggy? I don't know. So we all turn into Scooby-Doo, right? We all turn into Scooby-Doo. We don't know. Okay, we don't know. So when we don't have answers, okay, we become terrified. Okay, we become terrified of the unknown. And that's when you start making all these excuses. You start putting yourself in a position with all these different theories in your mind to validate that you're not doing. A classic thing, especially, again, I see on social media all the time, especially when the market's pulling back hard, which, again, I believe is always a phenomenal opportunity because, again, I trade both sides of the market. The theory on fear, okay, as an excuse, because again, there is no process behind it, is when the market starts pulling in, you have to sit on your hands. You have to be patient. Sit on your hands. Be patient. Listen, in the most aggressive, violent, linear market, you have to be patient. So the word patient is irrelevant. Again, like I said before, many traders don't know what they're patient for. Okay, the theory of sitting on your hands is a crutch. Think about this. is a crutch. Some of the most aggressive, violent trading markets I've traded when the market started coming in, because again, the theory is elevator up, steps up, elevator down, right? So when these stocks come in, they don't come in for 50 cents, they come in for $5, okay? So I believe the word fear, okay, is a crutch. Fear is the unknown. Fear is I don't have a process. So when you hear, and again, social media, again, long biased traders say, well, you got to sit there. You got to sit on your hands, wait for your opportunity. You tell Bank of America for that month that you sat there that you can't pay your mortgage because you sat on your hands. Because again, you have to be patient. Okay? You tell your kid's school, you know what? I'm not going to pay my tuition. I'm not going to pay my kids' tuition this month because you know what? I have to sit on my hands. Okay? This is all a crutch. This is all fear. This is all the unknown. And again, it all stems back to process. So when you're a new trader and you're trying to figure out who you are, okay, do I trade stocks? Am I a scalper? Am I a swing trader? Do I trade options? Do I trade futures? Hell, do I trade crypto? Right? Do I trade crypto? What am I? Who am I? What's my personality? All these things, again, stem back to fear. And when you can't commit to something, again, subconsciously, you're saying to yourself, I don't have a valid process that's going to validate what I'm doing. And again, that's why a lot of traders will shut down mentally. That's why a lot of traders won't click the mouse. That's why a lot of traders will give themselves every excuse in the book not to put on the trade because, again, they are not admitting they're scared, okay? But subconsciously, all the evidence is out there. Again, when you don't put on a trade and you don't take a pivot, and if you're sitting in the live webinar, for example, and again, you're a new trader, you don't know this yet because you haven't had, you don't have a track record with this process, and you're sitting there day after day after day, and you see $2 on Tesla, $4 on Google, 70-cent move on Alibaba, all these moves, and you're sitting there and you're trying to convince yourself, okay? You're trying to convince yourself, you know what, I'm not comfortable. Again, that all stems back to fear. So how do we get above this fear, right? What is this fear of the unknown, okay? How do we take the fear of the unknown and really embrace it? How do we put ourselves in a situation that fear completely goes away? And this is kind of how you kind of slowly transfer, right? Transfer the fear of the unknown to the fear of the known. Now, somebody's going to turn around and say, well, what's the fear of the known? Let me tell you what the fear of the known is, okay? I grew up in a 700 square foot apartment, okay, during the 80s in Brighton Beach, Brooklyn. Okay, for all you guys who know what that area is, it was one of the most poorest areas in Brooklyn, along with a lot of other areas out there. So if you told me what a mansion was, right, if you asked me what's a definition of a mansion, I would tell you a 2-bedroom apartment. For me, that was a 2-bedroom apartment. That was a mansion at that time. So for me, the healthy fear, and again, I'm always scared of ever putting my situation, putting myself in that area, putting my kids and wife in that area, that we would ever be put in that situation. That's called the healthy fear. That's the fear of the known. That's the fear if you break every single rule, every single trading day, if you completely omit everything that works and starts deviating to different areas of the markets that you have no control of, that's the healthy fear. That's the fear of the known. That's the fear that, you know what, one day if I continue to trade like a complete lunatic, if I can continue to break every single one of these very specific guidelines that I've designed to get myself to this specific point, that I'm going to wind up there one day. And my kids, instead of going to college, they're going to be going to work out of high school because, again, we don't have enough money. We don't have enough money to eat. We don't have enough money to go out. We don't have enough money to buy them clothes. That's my healthy fear, the fear of the own. So the uneducated, unfortunately undercapitalized trader that doesn't have any type of validation in the market, their fear is putting on a trade. When you finally get to the point and you're trading for 5, 10, 20 years, and again, I started when I was 24, 25, I'm 43 now. So when I first started, I had a healthy fear because I didn't know what was going on. So somebody told me, or somebody comment, it's 2001 to 2003, after the internet craze, after 9/11, I didn't make money two years. And somebody sent me an email, well, I know why you didn't make money. You were afraid to do this, and you were afraid to do that. And I'm like, yes, I was. And you know why I was afraid to do this and afraid to do that, and now why I didn't make money for 2 years? Because I didn't know how. I didn't have a process. I didn't have the ability to say to myself, Why should I be afraid? I know what I'm doing. I didn't know what I was doing. I didn't have a process. So again, that turns into fear. And that's what many traders have. They believe and they're entitled that they're going to be a trader, and I'm going to study so hard and I want it more than anybody, and all that great stuff that social media feeds you, right? The love fest. Oh my God, if you study hard. Bullshit. Excuse my French. Put the kids to bed. Bullshit. I don't care how much you want it. I don't care how much desire you have, okay? If you don't have the valid process, I don't care, and again, I don't care what that valid process is. If you don't have that valid process, you will continue to be living in fear, you're going to be continue trading in fear, and you're going to put yourself in a position that you will never succeed to the next level. Again, this is the only business in the world. I don't care how smart you are, how talented you think you are, how entitled you think you are, how much you want it, how much, how many times you look at the same chart, how much you read, how much you buy DVDs, and all that great stuff, okay? If you are in the wrong part of the process wheel, okay, so if your process is this, but you want it that much, you're still going to wind up with this. Because again, this is the only business in the world, folks, and I give you this as the day is long. This is the only business in the world that will completely put you out of your misery, completely put you out the pasture, destroy you mentally, destroy your family life, destroy your love life, destroy everything about you, break up marriages if you don't put your position to win. And that's why every single day, okay, and I give you a perfect example of Thursday's session, if you don't bring your A game every single day, you die. Think about this. You die. There's no such thing as, yeah, I traded B minus today. Well, what the hell is B minus? If you're trading B minus, that means something mentally deviated you from your regular comfort zone for you to trade an A. So when you're making money, you're not supposed to make money B minus. When you're making money, you're not supposed to go 2-3 days by saying, oh, I got so lucky today. If you get lucky one day, that's great. That's fantastic. Luck plays a lot of our side. Again, a lot of trades I do take, sometimes I'll overstay my welcome by an extra minute and I get lucky and it gives me an olive branch to get out. That's luck. But that's not a consistent way of making money. That's not how you take the fear of the unknown and make the fear known so you don't repeat those mistakes over and over again. This is the same situation that traders find themselves every single day. And a lot of times they'll confuse with luck, right? With luck than actually doing something right. So the fear of the unknown is much more powerful. Think about this, guys. It's much more powerful. It will completely handicap you from achieving your momentum, you're achieving your long-term desire to be professional traders. It will kill your potential. The massive side of the fear of the known is you don't want to go back to that area, right? You don't want to go back to that fear of the unknown because you already have an understanding what it took just to get out of that. So how does this translate into trading, guys? Like, how does this translate? Okay, and people ask me this all the time. Well, Dan, you know what? Yeah, I took the trade, you know what? But I only took a little bit. Well, why'd you take a little bit? Scooby-Doo. I don't know. Yeah, you know what? I've been watching this trade on, I've been watching you, I've been watching you and I'm seeing all these good things and, I see, wow, great call on Tesla. Oh, great job on Amazon. Oh, wow, great. Well, nice job on Alibaba. Well, how come you only took a little bit of stock? Again, it's the fear. Right? It's the fear. No matter what you see, how aggressive it is, no matter how the process is. So you have to put yourself in the situation at some point to look yourself in the mirror and say, look, okay, I have to control this. Okay? I have to control this. I have to buy into a process. Again, I don't care what your process is. If your process is you're buying up a $2 low float stock up 600% for the day, God bless it. Own it. That's your process. God help you, but that's your process, right? If you're trading options, if you're trading commodities, if you're trading crypto, embrace it, whatever it is, embrace it. I don't care what it is, how it completely deviates from my point of view, at least embrace it. Slowly but surely, that fear goes away. Now, how does this actually translate into clicking a damn mouse? What do we do? Okay, and I say this all the time. If you're doing 1,000 shares, you're not risking $316,000 on Tesla. you're risking that the stock, if it doesn't go within 2 minutes, you're risking slippage. You're either risking a break-even trade or maybe a 20-30 cent loss. So realistically, you're risking $200-300 for a possible measure to move to 317. So no, you're not risking $316,000. You're risking the interval of the trade. So before you're talking about it very uneducated about what you're actually doing with quote-unquote margin, just think about exactly what I'm saying. But for the rest of you guys who are trading and starting to build up your confidence, right? Build up your confidence and trying to get as much bang for your buck, ask yourself a question, right? Ask yourself a question. If I buy 1,000 shares of Tesla, or excuse me, in this case, if I short 1,000 shares of Tesla and the stock, and I lose 30 cents in the trade, is that going to impact my bottom line? Think about it. It's only $200-300. If the answer is yes, okay, we start slowly removing that fear. Okay, we start slowly removing that fear. Then you turn around and say, well, if I'm short 800 shares and I lose 20-30 cents and I lose a couple $100 in the trade, is this going to affect my life? If the answer continues to be yes, you start scaling down, right? You start scaling down. At 500 shares, if I lose $150 in the trade, is this going to affect my life? The answer is still yes, right? You ever hear that theory? You have too much stock on the way down, but you don't have enough on the way up, right, guys? Everybody hear that theory? I had way too much when I lost money, but I didn't have enough when I made money. Because you're not properly position sized. You're not properly tier sized. And the way you get rid of that fear and the way you get rid of that scenario is putting yourself in a position that you have on proper tier size. So you continuously ask that question until the answer is comfortable. So if you finally get to that position, you say to yourself, okay, I have 200 shares. Can I afford to lose, again, 30 cents. So on 200 shares, can I afford to lose with slippage $60? If the answer is yes, that's your position size. I don't care if I'm going in, and again, unicorn-like. If I'm going in with 10 million shares of the stock at 316, I have all this conviction. I think it's going to go lower. If you still have any type of reservations going in with your normal size, you ask yourself a question. Am I comfortable at 500? No. Am I comfortable at 300, losing 30 cents? No. Am I comfortable with 200 shares? And you say to yourself, okay, 200 shares, $60. I just went out to sushi the other night. I spent $65 on sushi. So you're telling me I can spend $65 on sushi, but if the stock gets down to 310, 311, 310 measured move, I can make $1,000? Sushi? $1,000. Sushi? $1,000. And slowly but surely, once you start developing and embracing that psychology, that you are comfortable in losing the amount you want to allocate this trade, but still get the biggest bang for your buck, that's when slowly but surely you start removing the fear, you start embracing the process, and now you are trading as technically as possible and removing all emotions, or start to remove all the emotions out of the equations, and at the same time, you're getting the biggest bang for my buck. So if you ask yourself a question, would you risk $65 for sushi to make $1,000? How many of you would not put on this trade? If you break it down that way, right? If you break it down that way, I'm going to risk sushi to make $1,000 if the stock goes back to its next demand zone. How many would you guys would not put on this trade, right? Think about it. It's all psychology. It's all sometimes just saying it out loud and making yourself laugh. And again, if 200 shares is too much, say to yourself, well, what about 100 shares? Can I risk $30 to make 500? Doesn't sound that scary, does it, guys? Right, guys? Think about that. Type it on the channel. Doesn't sound that scary, does it? I'm going to risk $30 to make 500. $30. $30. What is that? Is that a movie for two people? Right? It's going out to the movies for two people. Think about this. You're risking sometimes $30 or sometimes not risking any money at all. Again, if we deem it could be a flat trade, let's get out of the trade because it's a reload buy, reload sell in the trade. So sometimes you're not risking any money, right? You're not risking any money, but you're trying to get the biggest bang for our buck. So kind of tie a ribbon about this, guys. And the greatest thing about this, and John and Brian, you'll see that tomorrow. And guys, by the way, welcome to Access to Traders. We're a great community. Again, we're not an alert service. It's so stupid. I'm telling you, these alert services, folks, you're sitting there literally waiting for some random avatar to tell you where to buy a stock, and then 500 people are running it after to make 6 cents. It's, well, again, who am I to judge? Just talking out loud. But the point is, what we want to do, again, I'm nobody's teacher. Okay, I'm not anybody's teacher. Do you guys know what teachers make for a living? I'm nobody's teacher. Okay, I just have been doing this for such a long time. I will show you what not to do. The to-do part is the easy part. It's what not to do, the shooting yourself in the foot, the trading when you're tired, the trading when you just fought with your spouse, the trading that you have to trade because you're not going to be able to pay your electric bill, all these things. If you can embrace the process, if you can really give yourself an opportunity to put yourself in a situation for longevity, you're going to do very, very well. And what's great about it is you're going to see these things play out live. Okay, it's a very, very patient strategy. It's very, very, sometimes I'll sit 4 hours before I put on a trade, 5 hours before I'm going to trade it. But again, it's not about how many trades you put on, it's how many trades you put on properly. So guys, we're going to leave it at that. Thank you very much for coming out for episode 4 of Pancakes and Pivots. Enjoy the rest of your Sunday. This video will go out with the rest of our goodies somewhere around 6, 7 o'clock. Once we get it to editing, you'll have it out there. You'll get your options flow report. You'll get your watch list. Please come to Morning Strategy tomorrow at 9 a.m. We're going to be talking about Amazon. We're going to be talking about Tesla. We want to put ourselves in a position to win. So guys, thank you very much for coming out for episode 4, Pancakes and Pivots. God bless, and I will see you guys with God's help tomorrow. All right, folks? Have a great night, guys. I'll see you tomorrow, folks.